Good afternoon, traders. Welcome to our special session. We're going to do all the yen pairs here, guys. As promised you, yens are starting to move. We know what this chart is going to do. We have a very clear idea of what we should expect, and I think we can take advantage of it. For those of you who missed the up move when we spoke about it, since this will be on YouTube, that's more for my YouTube viewers, right? Those of you who missed the up move when we talked about this going up and you didn't pay attention, you should pay attention to what we're talking now. So based on the way we look at patterns, it's very simple. You have a move up, you normally get a consolidation, and you get another move up. Now, this is the simple form. This consolidation could be expanding, it could be running, it could be contracting, it could be things. So on the bigger picture, we broke this top. And we never had an impulse to the downside like this, which means based on the way we look at pattern, that impulse should come somewhere, right? So there's a very good chance, if you remember and watch the previous one that I did, that once we break this top, as a matter of fact, I was expecting them to go down because I'm looking at 1, 2, 3, and then go down. This one came above the top. So there's a good chance that it could come back like this, make a running flat, and then go. Now, we have seen these patterns quite a lot. They're very, very common. It's not anything that is strange. We've seen many of those where we get running flats like that. So if it is going to come back for a running flat, then you would assume that it would make a move that should be equivalent to this. I'm going to draw this. Not necessarily equivalent, but this normally gives you a gauge as to what you can expect. Something like this. Come back here. That is going to give you a perfect running flat. Sorry, like this. And then we're going to expect this to go back up. To complete this pattern is the way we see it. So the question now, is it actually coming down, right? Are we starting that downside? You never know when you're starting the downside unless you actually get a bigger consolidation to confirm it might be starting. And even then, it could still be a bigger correction. Always assume that in any pattern, when you're looking at patterns, always assume that you get an impulse, you get a correction, you get another impulse. That could be the end of this piece of that structure, regardless of where you are, right? Whether it came from above here, it could go back there. And then when this happened, you could have the reversal. If this came from here, this could go back up there. And that's how you get very complex patterns forming. So traders who watch what I do, when you see the piece that I'm showing you, it looks pretty simple. When you have to do the entire thing, that's where the complexity comes in. How do you break this up to make sense of it? Right now, if you're looking at this chart, you can see it clearly. You would say, yeah, I could see he has this impulse. He has that as a correction. You have a 1, 2, 3 going up there. You can see it. It makes sense. If I take everything else and you have to do it, it becomes very complex. So the same thing here. This is coming down really fast. What we're looking for on the bigger picture is at some point, right? See that down move? They get a little pullback. They come here, they get a deep pullback, and then they drop. So somewhere here, you're going to get a deep pullback at some point, and then that will confirm the bigger drop that is going to complete this pattern. Now, it doesn't always happen at the top. That's the thing. You could actually have this move, you could actually have this move going down, going down, going down, going, and then somewhere here, you get a big one, you get a final drop, and you see divergence here, and then you get a reversal. So where that bigger one is going to happen, or how many bigger ones you're going to have in that down move, is unknown. Those are unknown factors. You don't have to know them. But this is the weekly chart, so we don't really care where it's going to happen. That is just for the analytical purposes to confirm that, okay, well, now we're actually going to get that big move there. Now, if you're watching my video for the first time, and this is for YouTube viewers, you may say, well, this guy's a little crazy. What makes him think that thing is going to go down there, right? Well, what I'd advise you to do is go back and watch the webinar from this point or from this point, because we were telling you it is going to go up. And the same thing, the same logic, what makes you think it's going to go up? Nothing, just patterns, very strictly patterns, because that's how they behave. Why they behave that way? Because the same set of people who are trading yen today, last week, last year, are the same set of people who are going to be trading yen next week, next year, and maybe 5 years from now. And I'm not talking about people in terms of people like me and you. I'm talking about companies, governments, big, huge people where the volumes of trade is so much that it moves this market. The people who can move the market and make decisions, huge volumes, big banks, and a lot of big trading companies that in the billions trade this currency. They're the same people who would do it because it's involved whatever they're doing. If you're trading with Japan and you're one of the trading partners of Japan in Britain or in US or in Russia or in wherever you are, you might be trading with Japan for the next 20, 30, 40 years because you have orders in and out. And that means that the style in which you're trading has a certain pattern to it. That's simple. And that is why patterns are created in these charts. It's not random people coming in and do this. They create patterns. We studied how they did it in the past, and we look at how it's possible they're going to do in the future. What makes that happen? Don't ask me. The why is not a question. The question is looking at the patterns, understanding them, and then say, well, you know what? If it is doing this, then it should do this. And if we've seen that happen in the past, then great. Can this go up some more? Absolutely. We will see that as well, and then we'll decide. So you come to the daily, and then you said, well, can we prove that this is the start of the downside? Not as yet. But guess what? We're already trading it down. You don't have to know that this is the start of the downside to trade it down. Just like when it was here. We just assume it's going to go to this distance. And we thought that was the start of the downside. Turned out, no, that doesn't mean we didn't trade this up. That doesn't mean we didn't trade this up. And that doesn't mean we weren't trading these up. It just means we were waiting for that turning point. And I still don't know that this is the turning point. Remember, this one didn't prove to be the turning point. That didn't prove to be the turning point. Even this sharp drop here didn't prove to be the turning point. Is this going to be the one? Who cares? We traded all of those down. We're going to trade this down until it proves that it's turning point, which means when you get a bigger correction, and then you're going to drop more. So come back to the 4 hour, and you're looking at it. I think by now you can see that I'm showing you all the sells we have, and this is not all of them. We were actually selling this one in the lower time frame going down. We were selling this, and we are already selling that in the side, right? Every flag, when you understand that this could be a turning point, every flag, every correction becomes a sell. But remember, this is wave analysis. It's not like you're just going to sell and it's going to drop all the time. There are times when it's going to make very sharp pullback and you're going to make correction. You may go up like this for a while. And we're going to expect a few of that before it drops. In some of them, you will buy. So we'll be trading it down mostly, up sometimes, down mostly. Some of them we're not going to be buying. Like this one, we didn't buy this one. And we didn't buy any in here. You could have taken a few short-term trades in here. We saw that, but we didn't take it because it was, there wasn't really good risk to reward in it. But there would be those that will be risk to reward in it. So it's not just selling and let it go. Right? There's more to trading than, okay, well, you think it's going to drop, let's sell it and let's all go to sleep. That's not how trading works. So for those of you who are going to watch this on YouTube, if you want to make sure you get all of these trades, follow us very carefully on YouTube. We do it once a week. And you can get it daily if you want. You know what to do. So let's go. We're going to look at euro, right? So we want to confirm, we can't confirm. On the euro side, the same thing. If you go to weekly, we have the very similar structure, right? We have this move up. We have this move down. We got a 1, 2, 3. That's a flat by itself. So at least there is one more move down, not as big as the yen, but there is a move down to come. And then there will be a move up. Remember, if the yen moves quite a lot, and the euro yen doesn't move quite a lot, what that means is that maybe euro will be going up. If euro goes up and yen goes down, what happens is the euro yen stays in a shorter range consolidation. See? But if it is going to go downwards in that consolidation, it means that the speed of the yen downwards is faster than the speed of the euro upwards. See? That's the thing. And that is why euro yen will go down. Because yen is still going to be stronger than euro. Euro going up, getting strong against the dollar, yen going down, getting strong. The only thing that could bring this downwards and not keep it in a straight line, in a horizontal line, is that yen is stronger than euro. If euro is stronger, we still go up. Right now, the possibility of coming down is very, very strong. Right? Can this actually go up one more? I think it's going to go up one more. We're actually forecasting one more up here, and then the drop to start. But there is a move to come, and it will come even if you break this top. Right? So what we're looking at is, I want you to keep this pattern in mind. It's an incomplete pattern, right? That means there are parts to it we don't have. We don't have this part and we don't have this part. We're gauging this one for when this is going to finish, because as soon as that finishes, you're going to get this and you're going to get that. Pretty much like the yen, right? One down, one up. So if you follow that logic, you come back here in the 4 hour, You want to see that this is starting the downside. Now, I don't think this is starting the downside. And there are many reasons, because this pattern at the top is not giving us confidence that this is going to continue to go down. Sometimes they do, but most times when they come back all the way to the top there, I think we might have even tagged that up. They tend to go back, make a new high, and then drop. So I wouldn't be surprised if this goes back up. We're selling this right now, and we're selling it with a lot of caution, which means once you break this low at any point, this can turn to go back up. So you would have to trade this with caution. Every flag we get will sell, but any turning point, you'll have to take a break even or a small loss at that point because it can go back up. Go back to the weekly and you'd see the similarities of the pattern. Go back to the daily and you're going to see the patterns we're looking at. See, we have the incomplete pattern here too, right? Just like the euro. If you go back to the euro yen and you put the euro yen on top, let me just go back so you can refresh your memory on that. See, the bigger picture, we have this incomplete pattern, right? This down move, we don't have that down move, we don't have the up move. When you come back to the Franc and you have the similar structure, right? You're in this one, we anticipate that this thing could fall, right? This thing. So you've got this pattern here, this incomplete. We went up, we came down, we went back up, right? Now, do I think this is the low of that structure? No, because this looks more corrective. So at some point we were expecting a move down here, and then we were expecting a move back up, right? So because you got a move that come into it, you got a move that go out. And then whether you looked at this as a separate one or not, once we break these lows, the chances are we go back up, right? So if you come in here and you look at the daily, even in the smaller time frame, this pattern is incomplete, right? So even in the daily, there's a chance of us going up back first. Because we got to move down and move up, we got to move down and move up. And for the first time, we're trying to break down. This is trying to come down. So if this comes here, we could go there, we could come here, we could go back up there, we could come back here, break the top and then fall. So what this is telling us is that even if yen continues to fall, Franc yen is not going to go anywhere. It's going to stay in this consolidation, but we can see a pattern here, distinctly. And that means that we can expect Franc to go up. Right? There's some reason that Franc might go up. Which one is going to go up faster is the question. But on the 1 hour, these are huge range to sell and buy. If you can see the pattern clearly, you can see the range you're in, you can trade it. Right? So in the 1 hour, there's a very distinct up move, down move, up move, and then after that, you're doing this. This has to come back here, go back up there, come back here, go back up there. Is it going to happen exactly that way? It doesn't matter. That's the point. It doesn't matter. Whichever way it happens, we're going to get a trade. But if you understand what it's going to do, as soon as it starts to do that and you get a confirmation, you can start trading it. That is where it becomes important, right? That if you see the pattern, it becomes easy to trade. That is why these sells were so easy. The first one was here, the second one was there, the third one was here. And any flag or then after that, we will sell. You can easily put this here now. We didn't break the top, which means we're coming back for this low and then going back for the top, right? This one is coming back to this low and then we're going back to the top. On the bigger picture, there's a huge move once this consolidation, but I wouldn't focus on this bigger consolidation here. We focus on the yen to the downside and we focus on this one up and down based on what the pound will also do. When you go to the Aussie, same structure, same pattern. Go back to weekly. I think this one is a little different. We were looking at this morning and I couldn't remember having all of this here. I couldn't even remember having that arrow there because this arrow was put there in January 21. That is when I did the forecast for this and it was pretty simple forecast. You didn't have to be, you just had to look at one up. We looked at a 1, 2, 3 down and we said, well, we might repeat that move up to the top here. That's simple. It did go up. You made a bigger flat here. And then it continued to go up. We're making another flat here. See, we're making another flat here. I think this is making another flat. I don't think that's the top of the structure as yet. If this was more corrective, I would have put this as a running flat, but it's not very corrective. It is very sharp. So when we get sharp moves like that, what we say is that the chances are you're making a flat in here, right? The chances are we're going to come down here, go back up there, come back here, make a new high. Pretty much like this, make a new high, and then probably come down. On the bigger picture, we should come down, right? So in the bigger picture, if you look at this, once we get to this level here, and we're going to break that up, right? This one is going to come here where all the consolidated, and then we're going to break that up. and then we're coming back here. So in this case, you may want to look at the Aussie moving stronger. For a while, yen will be leading because we'll stay in here. But that up move, which means the entire down move on yen, Aussie yen will not be going any big move, but it will be making short moves up and down. It's only when the yen starts to go up that we're going to get that move. Now, this could become a really big correction because this correction here was huge. This is your corrective structure. You've got to move up, you've got to move down. We didn't break the low, we are going to go break the top. And from then we can drop again. I don't know if this, we'll have to figure out which one was the low. Which one of those were actually the lowest point, right? I don't know where this came from. We don't have the entire chart, but we can do that separately in another video for you guys. I don't want to spend too much time. But this consolidation, which means euro yen, sideways consolidation, pound yen, sideways consolidation. We know the range. It's pretty huge range. Aussie yen, sideways consolidation. We know the range. We have a lot of pieces in them. We have one down, we have one up, and we're doing the consolidation here. So 3 sideways consolidation. Let's go. New Zealand yen. Similar pattern, right? You can literally see the pattern in the lower time frame. Come here, probably go back up there, come back here, and then go. And the bigger picture, that's the daily chart, right? And the bigger picture, where are we in the bigger picture? Very similar structure, right? You've got to move up, you've got to move sideways, you're getting a move up, we will definitely break that up. So Aussie yen, New Zealand yen will go up, but they will only probably go up when the yen starts to go up. So dollar yen is going to drop really fast, faster than any one of them, while these will still be sideways here. Take this range as the sideways range before you go up. We can trade that. See, the reason I'm doing this is because we noticed that although the yen is falling this morning, we noticed that most of the yen pairs are in a sideways move. So we wanted to compare all of them and see why are they in a sideways move when the dollar yen is falling. Well, it's simple. Everything is moving. And that means we're going to stay in this range, and we know we're going to break this top. Right? Eventually, this will go up and break that top because it's not coming down. If it was coming down, we'd assume that, you know what, this could be either a smaller, with this piece in here, a smaller run expanding flat, but I don't think it's doing that. We're in a range here, and that means this sharp move down and this sharp move up, and we're getting a flat in the middle. So this is going to come down. I don't know how far. We're going to trade it. We're trading it down already. And then we're going to trade it back up. We're going to trade it back down. And then by then, we'll probably be trading it up. All the yen pairs up. Go back to the 4-hour. Every flag we're trading, every flag, every correction we're trading, you're trading it back to this level. Let's go in the Swiss yen. I think this is the simplest of them. Even on the higher time frame. Go to the weekly. This one is a very simple one. I think this is all we have. We need to get another chart. Let me see if I can find another chart with more in it. Yep, this one. We need this. Why we didn't have the top in the previous one? That's strange. I'm not sure if that wick is correct because if you use this one, we didn't break the top there. All right, so this one is short. Let's try another one. We need to see which one, if that top is real. Let's see this. This is a higher top. Let's try another one. FXCM. FXCM, this is lower. I'm an FXCM. Let's check Owanda. Owanda, this is lower. Let's check another one. I need to see at least a couple of them. This is nonsense. Let's go to one that makes sense. Oh, these doesn't have enough charts on them. So we have two that are higher, two that are lower. Let's use the IDC. Let's go back to the IDC one. We'll definitely need to check to see whether we're breaking that up or not. Now, the difference would be the pattern we're looking at. The difference in these, you see this flat here. So the difference in it is if this is the top, we can be coming down all the way back to the bottom here and then go back up as a regular flat. Right? That's the big picture. I don't think we're coming back to this level. We'll have to look at the whole big picture of this one. We'll have to do this separate because we're getting difference in the chart. If you go back to the chart that I am, where we don't break the top. See this one, we didn't break the top. If this is correct, then we're definitely coming back here and we're going back up there because this is a running flat, and running flats will definitely go back up. Just like this running flat. See this running flat here? This is a good example, by the way. And then this one went up. So if it is a running flat, we're definitely going back up. If it could be a regular flat, which means this top is higher, then we don't know how low this is going to go, and we can't guarantee that it's going to go back up. But if you look at it in the daily, this one could drop. Right? This is the up move, 1, 2, and the only thing I was expecting them to do was break this top going up, right? Because you got to move up, you got a correction, break the top. They actually broke out. This was their forecast to go to that top there, right? It actually went much higher. Can we go higher? Well, there's a good chance you could go higher if you look at the lower time frame, because this one is pulling back all the way to the top here. And that means this comes here, we could go back up there, come here, make a new high, and then drop. Let's go to the 4-hour and see what that looks like. Yeah. Basically, this is simple. You want this to come here, go back up there, make a flat. That would be the simplest pattern. Come back here and then go. Now, if Swiss yen and dollar yen are going to be, if the Swiss and the yen is going to probably be equal in their movements against the dollar, we might be stuck here for a very long time. So this one, we are forecasting a simple pattern, but because the pattern is so simple, it could get more complex. We'll do this in a separate one. I think the Aussie yen and the Swiss yen we'll do on 2 separate videos, because I want to see where the bigger picture is, whether it broke the top or not. CAD yen, lower time frame, same pattern. This one is simple. 1, 2, we're trading this down for 3, and then we expect it to go back up. What's the bigger picture? See, this one is pretty easy. I think anybody could do this. Take a thing, pull it here. You're making, see this is the low. We go up 1, 2, 3, 1, 2, 3. So you could put it like this. You made 1, 2, 3 up. You made 1, 2, 3 down. And you just broke the top. You're looking for this one. Can it go higher before you get that? Possible. So the question is it turning right now? We know that this is a consolidation for more up. We already know that. See, when you're changing direction, they don't consolidate at the top. See this here? When this one consolidated here, it made 1, 2, 3 and went up. This dropped, pull back, drop, pull back, drop, pull back. It didn't consolidate anywhere. We're consolidating at the top here. Go back to the daily, you'll see that. See, we're consolidating there. We didn't drop. This consolidation meant 1 more up. This consolidation meant when you come here, you're likely going to go back up. So there is more upside in this. Maybe a little more downside and then upside. Go back to the 4-hour. We're coming down, but we're in sideways. So almost all the yen pairs are telling us that they're not going to drop. They're going to go sideways. There's a lot of sideways move, but all of them have 1 more impulse up after the sideways. So if yen is going to drop, to fulfill that running flat, drop and then go back up so that all the yen pairs are going to go with the yen to the upside, it means we will be here in this consolidation for a longer period of time, and the dollar yen is going to fall really, really fast, right? This move down will have to finish really fast. This big move down here, right? Let's put it more like this, which would be an equivalent of this one, this here, right? It's not a very big move, by the way. It's only something like this we're looking for. The move up was bigger. This move up was bigger, right? So it just needs to do something like this, and that would be a perfect running flat. So while this is happening and it's coming down really fast, there's a good chance all the yen pairs stay in consolidation. This up move here, if this up move happens, not if, when it happens and from where it happens, is what is going to drive all the other yen pairs up. What happens when you finish 1, 2, 3? Well, then that's a good question. Do we drop from that point? That's a far way from now, so we're not going to go into that. We don't even know how this is going to go down. We don't know whether it starts to consolidate here. We don't know whether this is going to consolidate here and drop, because we only have 1 piece in it. So we're making the assumption that it could be starting the downside. And the good thing about knowing that is that you can trade it. If we see it turn, good, we're going to trade it back up. It wouldn't turn in one single wave. It will have to consolidate there before it turns. So what is going to be important? Where does it consolidate? At the bottom range here, or does it consolidate upwards? That's the clue. to know whether you're going to have more up or more down. I hope you guys enjoy it. Remember, this is just forecasting. This is just showing you possible patterns that we see in it. It has nothing to do with trading. Trading is on a 1 hour daily basis based on what we see in the 1 hour structure, whatever patterns we have for the trade there. If you like what we do, please share it. It's good knowledge. Come back and watch us regular. For my traders, let's go. Before I close, any questions? Anything you guys want to look at in details, or let's go back to the trading room and look at them in details? Anything, any questions? And don't worry, we can take it. YouTube viewers might enjoy it too.
Hi, Anil.
Yes,
I have a question. So, see, I was trading the US yen. Now, what I was looking at, like, okay, I understand, like, you'll get the impulse correction, impulse or the flags, but I took one trade from the top and I wanted to keep it. And so, if like on the 15-minute, let's say on the 15-minute, now they make different kind of flats, and I wasn't sure. I accidentally closed the trade because there's that stop loss thing, but that doesn't matter. So I wanted to keep one trade for longer term and then take more trades, put more trades to it. And so I was looking at the one of last night, the on the 15-minute. If you can look at the 15-minute.
This one here, or this one here?
That one, yes. The second
one here, right?
Yes. So I was just not sure, because sometimes I'll take a trade and it will go, but then it will reverse, go to my stop, take me out, and or yeah. So I'll basically take a break even. So I wanted to keep the trade, but I also didn't want to just keep the trade and then it goes back up, and then it's like you added a good trade but you closed it.
Okay, well, don't keep this one. Take your profit.
Okay.
So if you were in this morning, I was explaining, we would start keeping trade after we have a bigger consolidation. So let this impulse finish what it's doing. And when we get a deeper correction and we start to get this drop, we will start to keep one from the top here.
Okay.
You follow? We're not gonna keep these. You don't keep this one. This one is at the bottom of that impulse. Well, not at the bottom. We don't know where the bottom is, but it's pretty low into the impulse, and the impulse has already had a few corrections in it. Right? So you don't want to do that. You want it to drop. Let it confirm a daily correction. Once a daily correction confirms, what that means is you're going to have another daily impulse. And that daily impulse is when we're going to try to pick the top, which means every top we will sell and move it to leave it to break even. So let's say it drops a little more, and then it does one, it starts to drop. This one you don't need to worry about. It made another one. This one will start to sell, right? And it would either come down like this or it will drop like that. Now the chances are it will do like this and go back up. We're going to make profit in there, right? So even if you put it to break even, at some point here, you'll close the trade and we'll repeat the process from here. Going. It drops or it goes sideways. It goes back up, you repeat the process. So eventually one of these is going to drop. And that is the one we will keep, and we'll keep adding to. Because then you're going to get this long downside that is going to be really quick. They're not going to come back to the corrections. But if you do it now, you don't know that this is not the point from where you start to get that deeper correction before it drops. You see?
Okay.
So now keeping it, you're just going to give it up, most likely. Keep taking the profit off. The next thing is, even if it starts a correction here, but you don't, I don't know, let's say it starts a smaller correction in here, right? Then this correction takes 2 weeks without even coming to where you are. It doesn't make sense to wait 2 weeks in this, because 2 weeks of rollover, you're going to definitely be in trouble, right? Whatever little profit you make there is gone.
Yes.
So you don't want that to happen. Wait for the bigger correction. When we get that daily correction, then is when we're going to sit in trades. And the daily correction will be about 15, 20 days. So it's going to be like close to a month of trading. And then we will start to sell. Because now we know that there is a big daily impulse coming that is going to drop, 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 drop with very, very small corrections in it. The corrections in them will be small. They wouldn't be long term. You can hold those trades.
Okay.
See? But there is no necessity to do that unless you're investing. The way we trade, you can get in and get out, get in and get out, and pull much more money out of it, right? So let's go, for example. Our first trade was here. The second trade was here. There was this, I think this one was some small profit, but this one dropped, you go back. The next trade was here. The next trade was here. So you close this, you took profit, you get profit out of this. This one was closed here. You re-enter here. This is extra profit for you. You don't have to keep it. You can put a bigger lot size in this one. I mean, you can risk more than you would risk in that. If you keep one trade, then you still, you're not, even if you add another trade, that's still another risk to it. You think you want to add another trade here, that means you're going to have twice the risk. Just put twice the risk here. You still have that extra piece there. And every time you do that, it makes a bigger correction and it drops. You get in much earlier. So you still have that extra money in your pocket that you closed it for. See? So sometimes there's no reason to keep through a big correction, especially if you're a day trader like us. Get the hell out, take your profit, go sleep well, come back the next day, get the trades. The idea is if you're thinking about these small ones dropping, well, in that case, you go in the hourly and you can leave your entry on. You close the trade here. Let's say you close the trade somewhere in here, right? Put a stop under the low, put an entry under the low and a stop somewhere here and go sleep. You wake up back, you're in money. The same thing. You close it somewhere here, put the entry here, put a stop there, go. Especially when it's trending, it's not going to come back. Most times when they trend, they don't come back. They just drop. Especially after a daily correction, that trend is going to drop. That impulse will just keep going. So, okay, guys, I don't want to make it too long. I'm going to stop the recording here.